Good afternoon, everybody, ladies and gentlemen, and welcome to this week's trade review session. Also, the opportunity for you to ask me the burning questions that are concerning you this week. It's been a difficult week, as we'll see when we look at the results. I might as well bring them up there now. It's still been a positive week. It started on a negative note because I was stopped out on the two gold trades that we carried over from Friday. So first thing on Monday morning, you're down 240 pips, and you've got to start to work your way back from there. So was just a little bit better than break even by the close of business on Monday. Good days Tuesday and Wednesday, and then horrible day on Thursday. And then a decent enough day again today, which results in a net return for the week of 489 points. But I can't help but feel beat up or run over. Thursday was particularly difficult. 4 trades off the bat early Thursday morning that all went against me. My own personal circuit breaker kicking in at that point, and really reducing the trading from that point, and a bit of a legacy in relation to the way that I've traded today as well. In for a quick return, probably done about 10 or 11 trades today, maybe as many as 12. I'm not going to sit here and count them in front of you, but a couple of stops earlier in the week. Gold seems to have steamrolled me again this week. That seems to be a constant theme over the last few weeks. Had a couple of days where I caught gold quite nicely, but as an overall picture, if we look to the bottom of the screen, haven't looked at this yet myself. But on gold, as much as I feel that it's beaten me up continually during the course of the week, there's been 29 trades there for an 86 pip return, which I find quite surprising based on the way that I feel the way that gold has gone throughout the course of the week. We've seen gold rally up to 1980 a couple of times during the course of the week and then fail at that level. I think we saw that again today, and we're currently trading down around 1965 as the indices sell off as well. So a lot of this is on the back of some pretty depressing GDP numbers out of the US yesterday, unemployment claims continuing to rise, and coronavirus, spikes in coronavirus continuing in different places around the globe, notably in the United States, in a couple of the states there, and causing concern for this market, and that's largely related to the economic upturn that we'd seen over the last number of weeks and months with countries and states reopening. And getting back to business. There's a real fear now that will be changing. I spoke to a friend of mine in Texas just this morning, and the bars are closing, and we obviously have issues in Spain and quarantine issues for people who are looking to fly around from location to location. So I'm sure that many of you have a number of questions that you want to ask me today, and I'll gladly get around to those, and I'm sure that we'll get a message in from our resident gold expert who calls this market right pretty much all of the time so far, so I'll gladly report what he has to say as well. But I think there have been a number of mistakes that I've made during a couple of things that, whilst they've been negative, have been the right way to react, and then a few mistakes that I've made during the course of the week that I can talk about as well. So carrying the gold trades over from Friday last week, gold was pretty heavily against me. It was causing the profits from last week to be reduced. It was definitely felt like I got beat up last week with gold, but just being stopped out on those first couple of trades early on Monday morning was something that I really didn't need. need to go through. It would have been far easier to close the trades on Friday evening and start afresh on Monday morning. You can always initiate a new position. Yes, the market may have moved. You can reassess things as well. So carrying those trades over was probably the first mistake. Got myself a little bit too heavily involved in the indices on Thursday morning with the 4 trades that started to go against me. Cut those at varying stages, but my basic rule is if I have 4 trades going against me during the course of the day, back to back 4 trades going against me, that's a sign that trading either tapers off immediately in terms of the quantity of trades, or that I look to stop trading at that particular point. So I didn't stop trading. I continued for the remainder of the day. We had a much more muted trading day in terms of the volume of trades that were going through, but a few decent returns throughout that. A couple of trades that also lost towards the end of the trading session as well. But definitely a tapering back of the type of trading that I was doing. So again, there's a little bit of a legacy with that today in terms of the length of time that I'm keeping the trades open today. Unfortunately, if we look back at the markets with the last trade, sell of the DAX at 12,450. And I just opened the trades there. We're almost exactly 100 pips lower at this particular point. So could have held that trade for a good bit longer. The markets do look weak. We saw yesterday that there was some buying as the Dow futures fell below 26,000. So much so that by the close of trading yesterday, in after hours, the market or Dow futures had traded back to about 26,390, 380, 390. There were a couple of good trades today, and I'm going to explain my bias as well so that people understand that in terms of the trading for today. The euro trade that we did this morning, the euro traded up to about 119 and change. I think it went up to about 119.10 as a high there today, as you can see on the screens. The euro has ascended quite rapidly from about 113 just a couple of weeks ago to where it is at 119. So the first thing to think about today when you're looking and trying to work out what your bias is for the trading day, obviously my main belief in terms of the way that we trade is that you should start every day with that blank sheet of paper, not bring those trades in or carry those trades over. And I've done that far too much this week, and it does influence the way that you trade. So there's a definite move from me over the course of the next week not to do that quite as frequently as I have done. Make it very much the exception as opposed to the norm. But you can see, so if we just widen this out, so we look at the daily chart there, and you can see that move from about 112, 113 all the way up to where we are currently at 119. So it's the last day of the month. There is going to be, people are going to be trading in relation to the last day of the month. They're going to be reporting. They're going to be looking at some P&L numbers as well. So there's always a chance that you're going to see profit taking on this particular day. So that's the first thing that registers in your mind. You also look at, I did a market comment very early this morning about where the Japanese markets and where the Hang Seng were. I think the Japanese market was down about 450 points at 5:30, 6 o'clock this morning when I wrote that. And it closed down about 650 points, so a worsening situation in that last bit of trading, and the Hang Seng moved from about 50 points in positive territory to 60 or 70 points negative. So equally so, a negative close to the trading day there. So that really influenced my bias. And if we look at the trades that I've done throughout the course of today, everything has been from the short side, including the euro dollar. Huge rally, every opportunity that you're going to see some profit taking. The euro isn't going to run away with you in terms of 100, 200 pip movement. You can put your stops at 60 or 70 points and allow that to trade. The negative in terms of the way that I traded the euro today is I should have just sold and left it. Probably used a trailing stop that could have moved with it. Get the level right on that trailing stop at about 40 to 50 pips during the course of today. It would never have been called into question, and you would have been able to run that trade all the way down to about 118.05. I know it's a little bit higher now, but it has been all the way down to 118.05, and you could have ridden that all of the way. As you can see with every other one of my DAX and Dow trades, predominantly DAX trades first thing this morning, you can see that they've all been from the short side, looking for a move lower. Just unfortunately, because we had this session coming up, I closed the trade or the last DAX trade at 12,450, and we're now down at 12,360. So if you are still in that trade, you know, there's been an almost 3-digit move in that particular trade for you. There are a couple of other things that I want to speak about if I manage to get through to them, but there's a couple of things coming in there from Stuart, who's the gold guru at the moment. Stuart is saying that he's in two minds. There is an ascending triangle in gold pointing to a breakout long and a daily gap for a possible pullback below 1940. In terms of my thoughts, I think with the worsening GDP numbers, now there's a lot of conflicting stuff around gold, and when everybody says that gold is going higher, as they did with Bitcoin many moons ago, I do tend to prefer to take the opposite view. When everybody's invested, if the market doesn't do what people expect, then it can fall away quite quickly. So I'm always conscious of that. Never like buying at a high. I think this 1980 level is going to be crucial over the coming weeks. It is, of course, Friday today, so a lot of investors and big investors will be reassessing their portfolios ahead of the weekend. There could be some rotation out of the equities. The equities are already fairly weak, and into gold, which could give gold a little bit of a boost into the close this evening. I think possibly the opposite will happen. Yes, the dollar's very weak. The dollar has appreciated a little bit against some of the currencies today. Stuart is looking for 2,000 as his target still, as a number of analysts have promoted over the last couple of weeks. I'm probably more of the opinion that we'll go to, that the next move will be to that 1940 level. We've seen it a couple of times during the course of this week when we have sold off. We've got down to about 1940, maybe even 1939. And then we've rallied back up. The rallies have been are very quick. They are pretty constant in terms of the movement. Today we've traded down to about 1960, probably touched 1959, and then have rallied all the way back up to where we are now at 1969. I just think that ahead of the weekend, what we might see is a bit of a sell-off in gold as well. End of the month. Bit of profit taking. We have the weekend in front of us. Yes, there could be a bit of a movement to the upside over the course of the weekend, but I think we could see a bit of profit taking into the close, and you might see a fairly, and I'm not saying hugely significant, but a fairly significant move in the last couple of hours of trading. I think Stuart there has just also commented that there's the possible loss of momentum at 1980, which is where we have been hitting that barrier. Now, the one thing with gold, obviously, we are in, clear blue sky. It's record territory when we get up to those levels, triggering stops. People reappraising and re-hedging their portfolios at those levels could give the market that boost that sees it go up around 2,000. But somebody, and it could well be Goldman Sachs, are are definitely selling this market when it hits the 1980 level. If you look at the move to 1980 earlier this morning, the movement back from 1980 down to 1970 was quite quick. There was a constant selling pressure throughout that particular movement to the downside, and it was constant throughout that particular period. Couple of other things. There are a few more questions coming through, and I'll do my best to answer those. If I don't manage to get round to them this afternoon, what I will do is email you with the answers. One of the other things that people have mentioned to me a few times, and the indices continue to trade off. So there are a couple of things happening, I suppose. The indices are trading off, so there is a natural movement towards gold in that regard, but there seems to be a bit of a ceiling with gold at the moment as we head back towards 1970, and as I said, I think there will be a sell-off towards the end of the trading day today, unless we see a huge drop-off in the indices. The same concerns that are pushing the indices lower should realistically push gold a little bit lower than we're currently seeing at this particular point. One of the other situations that's come up a couple of times during the course of the week, and it goes back to stops and where you place your stops, and I've mentioned many times about fixed levels that I would use. The difference between me with lots of experience in this particular area and some of you guys who are new to the retail trading environment is, whilst I will know where to trigger a stop, and I may adjust that during the course of the trading day. The one thing that I am able to do is to pull the trigger and stop myself out of a position. What a lot of people find really difficult psychologically is when a situation starts to go against themselves, they freeze. It happened to me many years ago in my former life, but the act of freezing is probably the most dangerous thing that you can do, and not acting. So you have to be able to take a loss, you have to be able to pull the trigger. If you can't pull the trigger manually as a market is falling or rallying, whichever way that it is going against your position, then you have to have stops in place. Now those stops can be as wide as you want them to be, but it is important that you trade with that stop. So the element of or the decision making process as the situation goes against you is taken away from you, and there is an automatic trigger put in to safeguard you. I'm well able to pull the trigger when the situation becomes too tough for me, as you've seen with a number of the trades during the course of this week. But certainly if you're new to the market, it is important that you always trade with a stop. And we've spoken previously about standard levels that are put in place for some of those particular markets. But there have been a number of people who've approached me with situations where they're in too deep. Please don't let that happen. The markets can be very cruel when a position is starting to go against you. I think I'm going to finish there. There are a few more questions. I'll get back to you during the course of the day by email, and we'll speak to you again at the same time next week. Take care.